Alright, so welcome to the review for um, this week of January. So let's take off everything that we had from that we have on the chart. So let's go here. So this is essentially week 3. So let's rename this to week 3. I think that should be correct. Let's take out everything. Alright, so you can still see some things on the screen. I'm not sure where that is coming from. But okay, we'll just take all of that out. Okay, so let's go through price action as always. We'll take this to Monday. That should be Monday the 15th. Take this to 4:30 a.m. Perfect. Okay, so 4R. Not sure why all of this is showing, but I can just delete it. Okay, so on the 4R clearly here, so let's just structure. That's a break of structure. The 4R, we have our low here. So swing low 4R, and also a high here. We also do have here. Alright, that essentially gives us a range, which is from here to here. Perfect. So this is essentially what we have. So now we can draw this out. So this is our 4R extreme demand. So we have that clearly. Now we also do have here, you can see this was a sweep on the 4R. So we had that low, that was a sweep of liquidity, and price is now pushing higher. So if you look at this, you can see that here we have this internal chalk, as you can see. So now essentially we have this marked out as our swing high where the money is at. So if structure is to hold, essentially that means after we've had this break of structure, we now have the pullback. Price should sort of push to the upside. Now the question is, when is that going to happen? Is it going to happen immediately? Is it going to happen after a while? We have no idea. So but we know now the bigger picture in terms of structure is that price should push here, but that doesn't also mean that in the interim we can have price push to the downside before we get that continuation setup. So but drawing structure like this gives you a bigger picture of what price is doing, and then you can now narrow down, or you can now focus on a particular section and trade that. So this is the 4R. So definitely this section will be speaking more as to what price is doing as against the long-term swing structure that we have. So here we have this sweep of liquidity that has also created here a demand zone on the 4R, a sweep zone, right, on the 4R. So now price is around here. So what are we expecting? Well, we're expecting the price may decide to push downward or push upwards. It all depends. Now, when it comes to price and also trying to understand what the market is doing, you have to be really clinical to understand what the market is doing. And what I would advise is, if it happens that the market is noisy, you can't really tell what the market is doing. It's always best to see it out. Okay, of course I'll post analysis, you can always compare analysis, but if you don't really understand what's happening, it's best to always sit it out until you have that clarity and you can see what the market is doing without any ambiguity. Now looking at what we have here too, we can draw this. You can see here now it's also a sweep of liquidity, right? But now this is a lot of noise, right? Because by the time you look at this structure, the structure here is bullish, but then here you have sweep of liquidity. The market is just basically ranging essentially. Okay, so now let's go to 15 minutes and let's see if we can make sense of what we have there. So in the 15 minutes, here we have, let me draw this, zoom out. So in the 15 minutes here we have this high. You can see that was a sweep of liquidity. That high got swept, okay, and price sold off massively. So with that now in mind, we can see here excuse me, we can see here that this price action here, this low got taken out, right? That's a bearish chalk. Okay, so we have that now. What else do we have? We can draw all of this just to get an idea of what the market is doing. So here we also have a chalk. That's a bullish chalk, right? And then we have what again here? This also a bullish move, isn't it? Okay, so now with that we have here rejoined demand zone on the 50 minutes, which we can draw across. We can draw this across. And then also we have here, you can see this was a sweep. You can see the candle did not close above that high, so that's a sweep of liquidity, and now price is pushed downwards, okay, or price is pushing downwards. So with that now, what are we expecting here? Well, we can expect that price may push to the upside, but also this sweep of liquidity sort of dampens that perspective, right? Because after price swept the highs, price failed to close above it and price has pulled back. So anticipating the price may push upwards, well, may work out, but in terms of structure, clearly we can see that with this sweep of liquidity, that probability is sort of not too, I would say the probability of price pushing to the upside, it's a little bit dampened, okay, as a result of the sweep that we have here. So we'll either have to sit it out, or we can anticipate the price will sell off depending on, you know, time and price, and that's when London opens and what price is doing at the time. So this is 4:15 a.m. UTC plus 1 time before London opens. So let's take it to 7 a.m. So here we are, 7 a.m. London open. Now with this, you can see price is just around here. There is no clarity as what price wants to do, because here we did not have a proper closure upwards, well, you know, to the upside, where we can now say, okay, price has now returned to this demand zone. We can now look for a continuation setup to push the upside. So I would want to sit this out and actually wait for more confirmation before, or for more structure before I decide on what to do. Okay, so now we have something here. You can see the price is failing to push to the upside. We have here a bearish chalk, okay, and so we have the bearish chalk, but also something that you need to understand here is because we also have a sweep of liquidity here, so we can actually draw this entire candle out. So that would essentially be, you know, our supply zone if price decide to push to the upside. But now, because already we have here, you can see this chalk and you can see this high here, we have this area here, so I would expect the price may pull back into this area before price sells off. Now if this fails, price then will tap into this area and then we get that continuation, that sell off, hopefully. But this would be my premise for entering the trade here. So I'm going to draw this, okay, I'm going to draw this out. Now the reason why I'm going to just draw this out is because if price takes out this area here, hopefully this area holds, but if this fails, then hopefully this one holds. So typically we're going to have a trade here and then another sell setup here, hoping that, you know, one of them should hold. So with this now, we can put this here like this, and then we'll just go for, let's see where this ends first. This ends first. Okay, so price is already pulling back. As a matter of fact, has actually pulled back. So here we have our stop above this area like this, and then our low, just being conservative, the low should target, our next target should target, you know, the last low, right? So with this now, let's see what happens. Okay, perfect. So that's our first trade. So you can see 1 2 3 thereabout, and the simple idea behind this trade is protecting this high and this high, and simply put our entry here. Of course, the entry could have been here, right? The entry could have been here, but just have in mind that sometimes you may have price come close and then you would get tagged in before price sells off, but you get the idea. So anyways, with that, now our first trade worked out perfectly, and we're conservative because there's a lot of noise happening in the market. So we can't say that, okay, we're just going to hold this and then swing to this low, because that's the market. It's not a perfect price setup, so we have to be very conservative with our with our target. And that's why, the target was simply the last low that was created as the market opened during London session. Okay, I hope that makes sense. So with this, we're essentially good. All we now need to do is to wait for New York session, and let's see what price is going to do. So this is New York session now, 1 p.m. So cool. So this is New York session now. You can see that price has now taken out this low, right? So this previous low essentially that led to a sweep of liquidity. Price has now taken it out. Clearly you can see that, right? So for me, with this type of price action, I'm just going to take this out, okay, for clarity. Now you can see, based on what we have here, that price now has taken out this low, essentially making this sweep zone our sell zone, where we're expecting to to probably sell when price returns here. I'll have that continuation sell setup to now target this low. Now, is that going to work out? Is that not going to work out? I have no idea, right? So all we just need to do is to anticipate what the market is going to do and try to see what we can make of it. Now you can decide also to say, okay, I want to enter from this area, okay, what we sold during London session. You can say I want to sell from this area, but do bear in mind that this area is not so much of the supply zone that may hold. Price may decide to push into this area before you get that sell continuation. So we're going to try, and we're going to have this here again, and then we're going to target the low, right? So we're going to have something like that, and then if this fails, we have another entry right there. So let's see what happens. Okay, this is what time? 2:30. Okay, and 5, the market did not come all the way here, so that's perfectly okay. Monday is done, and we go to the next day, Tuesday. Okay, so 6.5, cool. So now we can see here, essentially the market is selling off and already tapping into this 4-hour zone. So now what do we expect to do? Well, our expectation number one is, because price is tapping into the 4-hour, we would have to wait. Let's go to 4-hour. We would have to wait for a bullish chalk if we want to go long, right? So price has now tapped into this 4-hour sweep zone that we have here. We can't just say, okay, now price has tapped into this, when I want to go long. No, would have to wait for confirmation. A bullish chalk would tell us that, okay, maybe price wants to continue to push to the upside. So but until that happens, we continue to trade the bearish move. Okay, so here we go. So what do we have here? I'm just going to leave this here. So what we have here is that this low has now been taken out. Okay, so that gives us another supply zone just here. This is the highest point that led to that low taken out. So I just love to draw the highest zone, and then just to protect it. So and not to overcomplicate things, because one of the things, one of the problems that a lot of people have when it comes to trading is overcomplicating structure. It's simple. Take the last high, draw it out, and that is just it. Okay. All right. So now we have this. So we're not going to do anything here really. We're just going to wait and see. Are we going to have, that continuation setup? By the way, this is actually a bearish chalk, right? So what do? We know that the market is selling off massively. So what do we expect? Well, we'll continue to follow the trend until it fails. So we have here 16 pips. So this is also another area that we could consider to sell from. Okay, and the question will be why, even though price has tapped into the 4-hour. Well, let's go to 4-hour and let's look at something. This is essentially price in the 4-hour, and the 4-hour is bearish. The internal structure, right, is bearish, not the swing structure. So we can continue to trade the trend until that trend fails, and then we take the opposite direction. Okay, so you can decide to do that, or you can decide to sit on your hands and wait until price is out of this area, you have clarity before you decide to enter. But for us, we're willing to continue to trade the trend until the trend fails. Simple logic and simple stuff. So we'll put our stop above this area, and our target is going to be here. So let's see. Okay, so we have larger target. So that's all good. Okay, guys. So you can see what I mean when I say that your entries, now you can see this was the last candle up. You can see the entry here was not right on the edge, right? So, and this is something you have to bear in mind. You need to have a consistent hope entering the market. If you're going to be entering the market at the edge of, maybe the zone, you always want to make sure you do that. If you're going to be entering maybe at the 25, maybe at 25%, whatever now, mark of the fib tool, when you put that here, stick to that. If you're going to be entering at the middle, stick to that. Okay, so whatever entry you want to adopt, just stick to it. At the end of the day, what really matters is, are you making money? Are you making profit? Okay, at minimum, of course, 1 to 3, and then upwards, right? Because you're trading 50 minutes. So at a minimum, you should get a 1 to 3. If you can get a 1 to 3 from the trade setup, take it. It's simple as that. Now, because if, for example, this was just away from the entry, we wouldn't have been tagged in. If it was at the middle, we wouldn't have been tagged in. But if it follows our trading plan where you would enter at every point in time, then you're good. But if you're not following your trading plan and you just, every time you're changing your entry, then you're definitely gonna have trades that you're gonna miss, and then you're really not gonna be happy with that. So anyways, this worked out, and that is clear 1 2 3, and that is it for us during London session. So what do we do? Wait for New York session. Now, interestingly, you can see how the market is selling off like massively, right? So let's take it to New York session. So clearly you can see here this low has now been swept. Let's go to 4 and see if we can get better. Yeah, so essentially that low has been swept, so this 4-hour area now is now essentially useless to us, and that means that the market is now officially bearish. All right, so the market is officially bearish, and what this means now, this our target is definitely going to go. You see why? Even though we had a clear bullish, let me zoom out. So even though we had a clear bullish structure here with the target of this high, now with this structure, we can see that the price has changed. Essentially, the internal price actually has changed from, the bullish bias to now the bearish bias, right? So what this tells us now is that price is, there's the likelihood of price really crashing into this area. But is that going to happen fast? We still don't know. So what do? We go to the 15 minutes and we trade the setups that we get on the 15 minutes. So the market is officially bearish on the 15 minutes. We know that. So what do we now expect? We expect that continuation setup to continuation bearish setup to continue to play out, right? So we're going to draw here the zone. Perfect. So we're going to draw that out. Of course, we have all of these areas here. So we're going to draw this out and expect the price will come here, tap into this, and continue to sell. All right. So we continue to trade the setup until it fails. Simple stuff, really. Easier said than done, but essentially that's how it works. Okay, so let's take this New York session. Okay, having a lot of swip. All right, market is really just there. We have here this continuation. This is already a bigger structure to the downside, right? So we have that, and then we also have here, this is a sweep. That's a sweep, and what that also created for us now is that we now have this. You can see that that's a large zone, right? So with large zones, you have to decide. With large zones like this, I'm not going to enter the edge, okay? I would want to hope that price would sort of give me something nice and really push up, So at minimum 1 to 3, right? So let's see if at all price does do its thing. Perfect. So with this, you can see what do we have at around 5:15. Yes, I remember this trade actually. I took this trade. So I remember this trade. So around 5:15, price actually tapped into it, even though we wouldn't have entered past 5, but the setup was just there, for the taking. So I remember taking this. So 5:15, price tapped into it, and then our target was hit convincingly by what time? 6:15, just about an hour apart. So this didn't work out. So perfect. So that is it for Tuesday. So the next we go to Wednesday. So let's go to Wednesday and see what we have. Okay, so here we go. So this is Wednesday. The market is trending again bearish. So what do? You keep following the trend until the trend fails. Really just simple logic, right? And that's why the stock in profit way of trading is just straightforward. Sincerely, if you just stick to it, you would have no, you everything will just literally be falling for you, in pleasant places. The lines will literally just be falling for you in pleasant places. Okay, so we have this now. We can actually do this. So this is the low that got taken out. The highest point of that, the supply zone that effectually led to that is this area here. Okay, so I'll draw that. So we have that here, and now we also do have this continuation bearish price action. So what do we expect? Well, we expect the price will return here and then continue to sell until the market tells us otherwise, right? We just continue to follow the trend. So with this, we have a stop about this area, 1 to 3 at minimum, right? So this is not going to give us 1 to 3, so definitely we'll try to see if we can get that. Okay, so now we have a better target. Okay, so let's see, 1 to 3. Okay, now I remember this price action. This was really, really, really painful. Look at this. This was around 9 a.m. Price pushed to the downside, started dancing, and was just doing whatever it was doing. It was doing this until New York session, literally. So I remember not even giving a forecast for New York session, as this was still in the play. And then yeah, so I think news now came out, and that was effectually what led to the market selling off massively. Yes, and our target was hit perfectly. So this is it, guys. So what do you learn from all of this? What you need to learn from all of this is this: and the market will continue to set to trend, or will continue to sell off, right, in the direction of the trend, or continue to buy in the direction of the trend until it fails. Just continue to follow the market. So irrespective of what the market is trying to do, whether it's trying to show you, buys and stuff. Now coincidentally, what do you observe? As a matter of fact, I'm just realizing this, all through the trades that we've taken from Monday, we actually took no losses. And the simple reason for that is because we're just simply following the trend, simply following the trend, nothing else, no complications, nothing, just following the trend. Okay, and you can see how everything is just aligning for us in our favor. And that is it for, and that was it really for, for Wednesday. It's already 3 p.m. and you can see there was a sweep. Oh, that eventually led to a break of structure. Okay, so and after the break of structure, if at all you still wanted to trade this, all you need to do is draw the highest candle again, draw it out. All right, so you draw that out, and then what do? You anticipate the price maybe to get this area, and then give you a sell. Trade and ride the trend until the trend fails. Simple logic, guys, no complications. So this is past 5, so we'll be off the market after this. So we'll take this to Thursday. Thursday by, yep, ooh, that's quite fast. Okay, so Thursday by, it's already 7:15. Well, let's analyze what we have here. So you can see now that the market has officially changed from bearish to now bullish. The previous high has been taken out, this other has been taken out, so there's no reason for us to be looking for sells here. All we're interested in is looking for buys. Okay, so the market has been selling off since Monday, Tuesday, Wednesday, and now Thursday. The market obviously is reversing, or has reversed, as a matter of fact. So we just need to do again, what do? We simply follow the trend. We don't fight the market. The market is our best, it's our friend, our pally. Is it pally? Is it pally? I hope that is it. So anyways, we don't, the market is a friend, so we follow the trend. The trend is your friend, you know. Yeah, so with that, now we have the lowest point here. We draw that across. Interestingly, we also have a sweep zone here. So the demand zone is also a sweep zone, clearly, as you can see here. So with this, what do we expect? Is this really a good area to say, oh, I'm going to enter here? As far as I'm concerned, the answer to that is no. This is not so much of structure that you want to trade off. So just relax and wait to see if we can get more. Okay, so you can see clearly that has been taken out. So let's see. All right, now, what is our goal? Our goal is going to be this. The market is reversing, low below that area. We'll have this. If at all, price, this is 1 to 3. It's large anyway, it's about 13 pips, but it's large based on how we trade, right? This may not be large for some people, so, but let's take this out on the 4R. Okay, all right, so with that, now we have this, right? So we expect that, okay, if the market at all comes here, then we may get that continuation setup, or if we get a bullish, structure from around here, then we can take that. So let's just play it and see what happens. Nice. Now look at this. Liquidity sweep. You really just have to be clinical when it comes to all of these things, right? There's no right or wrong way of doing this after you've learned properly. I need to put that there, because when people say there's no right or wrong way of trading, they're referring to people who already know what they're doing. So yeah. Okay, so here we have a sweep zone. So this is showing us the market is wanting to push the upside. Now, is this going to hold? I have no idea, but I have every reason to believe that this may hold. Mark the keyword there is may hold, right? Not will hold, may hold. So there's no certainty about anything. You just have to follow the structure, follow the trading plan, and execute. So with this, now we can put an entry here, stop below this area, and then we target, of course, the high, right? Now this is not so much of 1 to 3 at least, so we can push this back and see. Let's just want to get that. Okay, this is yeah, the trade already. All right, so awesome stuff. Our first loss for the week. Okay, so price is still coming here. Now this, of course, is still valid because our low is still this trade is still in place, and our target is still this high. And why so? Clearly because the market has changed from bearish to now bullish and has created this new high here. So our expectation is that that high would hold, and then hopefully, we're gonna get we're gonna extract something from that. So this trade, of course, will still be valid and cool. So we took this for 2 reasons. One, there was a sweep of liquidity that led to a chalk, and as a result of that, we decided to take the trade. Now, some of the persons will argue that yes, even though there was a liquidity sweep, there was a chalk, this wasn't the right place to take the trade. Well, you may be right, and at the same time, for getting in also, I may be right, but these confluences were okay enough for me to enter. Other persons will argue that okay, it wasn't really time, and there was no correlation between, or there was no confluence of time and price. And what that means is the London session was not confluencing. No, London session was not time. That means London session open, did not really meet price, if you get what that means. Anyway, so because we're in London session, so it was a nice time to enter the market. You can see it was already around, this was already 11. Okay, so all the momentum from London market open, was already dying off, so there was no reason why this could have pushed the upside. Well, you can decide to take any side of the aisle, but it is what it is. So we have this anyways playing out. So let's see if this holds. Now this is now New York session, right? So because this trade is playing out, we're not going to stack it, right? We want to see if this is actually going to work out. So we just hold. If it ends up as a loss, all good, no problem. So we can see now the market is pulling out effectively, right? So let's see how this continues to build. Now, this is also something I need to mention here. What do you observe here? You can see how the market is just consolidating around here. And this is why a lot of times I do advocate for not necessarily moving your stop loss. Of course, you can move your stop loss depending on where you are in terms of your learning. But if you imagine after the market tapped in here, the market pulled out, you moved your stop loss, you'd have been taken out, break even trade, and all of that. The essence of a stop loss is you saying, I want to take this loss. If it's a loss, let me take the loss. Let me chest it, right? That's the whole essence of a stop loss. So if you know what you're doing, stick to your trading plan. You don't have to force things, and you don't also have to extra micromanage your trade. So if you enter, the first thing you need to know is that your loss is a certainty. If it goes to profit, great, but when you enter, loss is always a certainty. So you have to be able to trust yourself and trust your analysis and allow the market to do what it needs to do. And by the way, it also helps with your psychology in the long term, sincerely. Okay. All right, so there we go. So of course this is already past 5, so we're out of trading, but of course because it's an open trade, so we'll allow that to continue to play out. So let's take this to Friday. So clearly it's inching towards what we wanted to go to. So 645, so this trade of course is still in play, clearly, right? So 645. Now what do we have here? Well, you can see here that we already have a bullish continuation, so we can draw that out. I'm just going to use the chalk here, and then we can draw this, the last candle down, very large candle, all the same. We can draw it. Now of course that candle also, it's also a sweep, or that zone is also a sweep zone. So we have that now. So with this now, we can stack. You can decide to stack this and say, okay, I'm still going to target this high, and price returns here, and hopefully I get that sell off, that buy. Then we also have here, you can see this. Now this happened during the swap, okay, and that happened the day prior, that's Thursday. Now there are those who would also argue that this is also a good zone to enter, and well, I wouldn't fault anyone. So but it is what it is. So for me, we're just going to stick with this because we have an active trade, and we don't want to stack any position that we can't really confirm, sort of, right? Okay, price is pushed to the downside now, as you can see. This is New York session now. So what do we have? Let's draw this. Okay, so with this now, we have this as our low. So with this, you can decide to stack this because it's of course Friday and the market is coming to a close. So that's that. Ooh, you can see that swept the low. Oh my, and you see, and now mind you, we still have an open trade, right? We still have this trade from Thursday still open, so you can see how price swept our low, even though we had very nice structure here. But would you have done anything different? Because we gave ample space for that. But it is what it is. Price does what it does, so we take that without any problems. So we also can take, you can see continuation chalk. So with this continuation chalk now, we can also enter here with our stop below this area here, as you can see, and the target will still remain the same. All right, so that's that. Friday came to an end and the market continued to push up. Okay, and of course Monday now has opened because I'm doing this review on Monday after the market is open, but the target still remains the same. This remains our target, and that is it. So with this setup alone, you can see we took one loss here. This is still in profit. We're still trying to trade this. This did not work out. Price did not return all the way down there. This give us a false flag, not really a false flag, but anyways, our low got swept, and then we re-entered here, and now we're targeting this high, and that is essentially, it. So this, is the entire review of the trades that worked out, on the third week of January, and I hope you've been able to pick a thing or two from this. So depending on where you're watching this, if maybe you're watching this on YouTube or something, of course you can join the mentorship program. The mentorship program is there for you. Join the mentorship program and you would benefit a lot from it. So I look forward to seeing your comments, and also please do not forget to subscribe, to like, if you love this, and see you next time. Stay stuck in profit. Bye bye and cheers. Oh, sorry, just before we go off, let's list out all the trades that we took. So Thursday and then Friday. Okay, so on Monday we had what now? We had this trade, right? So Monday we had this trade 1, 2, 4, so plus 4R. Okay, then on Tuesday we had another trade, and that was plus 3R, I believe. And then still on Tuesday we had another trade in New York session, which was also plus, let me just be sure, plus 3.4 plus 3, yeah, so plus 3.4R, right? And then on Wednesday we had plus 3R. Okay, and then on Thursday we had -1. Then yeah, so -1R, this is plus 3.7. hopefully target gets hit. -1R, then we had plus 3.7, sorry, 3.7, right? Okay, 3.7. Then also we had on Friday, we had this is -1, -1R. Then we have plus, this is plus 4.6. We can just make this 3, then just make it plus 5 instead of 4.6, so plus 5R. Okay, so the total RR is what? So we can say 4 plus 3, 7. 7 plus 3.4, that's 10.4, plus this, that's 13.4, minus this, that's 12.4, plus this, that's 15.4, then minus this, that's 14.4, then plus this, that's 19.4. Okay, so 19.4, right? By all standards, this is awesome. If you were risking 1%, that is 19.4%, guys. And they were risking, half, maybe 0.5% per trade. That would give us what now, 9.52 thereabout, right? Percent. Okay, that's our return, and that's amazing performance. Our wins, total wins is what? 1, 2, 3, 4, 5, 6. Okay, and then losses, I had two losses. Okay, and by all standards, this is an amazing report. So this is week 3 of January, right, 2024. Week 3 of January 2024. So that's going to be from what is the date again? So that's 15th to 19th, right? 15th to 19th January. Yeah. So 15th, 19th of January, and this is our report at the end of the day. Okay. So of course, this is us going through price action in hindsight, but this is you can literally see the logic behind every entry. This isn't just guesswork or trying to align stuff. But there's a logic, there's a process to every entry, and I hope this is really something that's really beneficial to you. So hey, so that's it. Stay talking profit and see you at the time, and let me know what you think in the comment section if you love this. And yeah, hopefully I share more with you as the year continues to develop. All right, so bye bye, cheers, and see you in the mentorship program if you decide to join. Bye bye.